Good afternoon and welcome to the Petra Diamonds Limited preliminary results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll, and I'd now like to hand you over to Richard Duffy, CEO. Good afternoon, sir.
Good afternoon, and thank you very much to all of you for joining us today for our unaudited FY23 preliminary results for our financial year ended 30 June 2023. We'll just move through to slide 4, please. Petra is the largest independent diamond producer with the world's third largest diamond resource, providing potential for long-term mine life. We've taken actions to strengthen our business and improve cash flow generation, and together with our strengthened balance sheet and capital discipline, this means we are well placed to deliver on our value-driven growth strategy. We are building resilience in our business through the implementation of our operating model to deliver more stable and predictable performance and to address any operational challenges. Our strengthened balance sheet enabled us to be flexible in our approach to diamond sales during a softened market, while still progressing our expansion projects. And we are on track for annual production to increase by up to 1.3 million carats incrementally in FY26. We continue to focus on continuous improvement, embed our sustainability framework, and apply the disciplined capital approach I mentioned earlier. We are confident that we will continue to generate sufficient cash to fund our capex. So Petra is both resilient in the short term and well placed in the medium to longer term to leverage the fundamentally supportive diamond market structural supply deficit that I'll talk to you a little later. Turning to our operating and financial summary, our revenue in 23 was lower on the back of our deferred tender sale, but we strengthened our balance sheet through buying back around a third of our loan notes during the year, providing us with greater flexibility. You will note that our diamonds produced were down as well as our tons treated, and this was the result of Williamson not operating for 7 months of the year, and also some operating challenges at Cullinan Mine and Finch, particularly in the first half of the year, which we had addressed previously and which were largely mitigated in the second half of the year. Our capex increased from $52 million to $117 million as we ramped up our projects at Cullinan Mine and Finch. Of note, Koffiefontein is now classified as a discontinued operation, having been placed into care and maintenance in the run-up to a responsible closure, and it is therefore excluded from our production and financial numbers. Turning to safety, which remains our number one priority, we do work in challenging conditions, but continue to strive for a zero-harm working environment. You'll note a slight uptick in lost time injuries in financial year 23, and this resulted from increased activity around our projects that I've mentioned already, and a single blasting-related incident at Cullinan Mine. Most of these incidents are behavioural in nature, and we continue to focus on our safety and behavioural intervention programs. Talking to our sustainability journey on the next slide, we continue to focus on embedding our sustainability framework founded on 4 pillars: people, planet, partnership, and production across the business. Our people enable us to achieve our shared vision and strategy, and ensuring their health, safety, and well-being in the working environment is a priority. In particular, I would like to highlight our Petra Culture Code, a formula for success that was created by all of our employees and guides our behavior as an organization in driving cultural change. In respecting our planet, we are looking to responsible consumption and production and ensure that they are embedded in our operational planning. We have updated our climate change strategy in accordance with TCFD recommendations, setting targets to achieve our financial year 2030 reduction target of 35 to 40% against a 2019 baseline. On shared value partnerships, these are fundamental to our operations, and the relationships that we maintain with our host communities, local authorities and governments are not only aimed at improving business opportunities, but also around creating shared value outcomes. This year, a priority has been ensuring a responsible closure process at Koffiefontein and the identification of alternative economic development opportunities for its surrounding communities. The closure roadmap for Koffiefontein is premised on sustaining quality of life and livelihoods. We have developed a rehabilitation plan for the operation, which is supported by financial provisions for the closure aligned with the relevant regulatory requirements. The final pillar, production, which underpins all of this, aims at ensuring responsible and sustainable production from our ore bodies, while also optimizing the life of our different mining operations. This year has been achieved through stabilizing operational performance and a continued focus on continuous improvement. Turning now to the market. As you will have seen from our recent announcements, the diamond market has softened during the year, and we anticipate this to continue in the short term. However, support for the market and diamond prices is expected in the medium to longer term as a result of the prevailing structural supply deficit, which I'll expand on a little in the following slide. At PETRA, around 80% of our revenues are derived from only 20% of our higher value diamonds, and this aligns well with ongoing growth projections in the luxury goods market. An important consumer aspect is the emotional investment proposition of a natural diamond that is unlike any other. The marketing of this is championed by the Natural Diamond Council, who are also currently seeking new partners across the value chain to increase the promotion and allure of natural diamonds. This already includes 8 of the world's largest diamantaires, several diamond bourses, and a manufacturing association. On this next slide, which is one we've shared before, it really just highlights that natural diamonds are rare, precious, and finite. With maturing global diamond mines, major mines depleting, smaller mines on care and maintenance, and global exploration investment at multi-decade lows, supply for diamonds has peaked, and the structural supply deficit is expected to persist. This, combined with concurrent growth in luxury goods demand from emerging markets, means that the fundamentals are in place to support stronger prices in the medium to longer term. I will now hand over to Jacques, who will provide an overview of our financial performance. Jacques.
Thank you, Richard. So moving to our FY23 financial results, you will note that revenue came in at $325.3 million, which was impacted by a 20% reduction in diamond recoveries, the decision to defer certain of our sales to fiscal year 2024, and a lower contribution from exceptional stones. While on this topic, we today confirmed that the definition of exceptional stones has been changed to stones selling for $15 million or more each, up from $5 million used historically. We adjusted this threshold given that we only saw 3 such sales incidences since 2016, truly reflecting the rarity and exceptional nature of these high-value stones. You will thus note that in FY 2023, no such exceptional stones were sold, while a single 39-carat blue stone contributed just over $40 million in FY 2022. As a result of lower sales revenues, partly offset by improved operating costs, adjusted EBITDA reduced to $130 million, yielding a 35% EBITDA margin compared to last year's 49%. The planned increase in capital expenditure, we came in at $117.1 million for the year, coupled with the cash cost incurred at Koffiefontein, which is now counted as a discontinued operation, led to a $66.5 million outflow of operational free cash for fiscal year 2023. The repurchase of some $144.6 million of our loan notes saw our gross debt reducing to $247.5 million, and unrestricted cash balances totaled $44.1 million at year-end, while our R1 billion or $53 million revolving credit facility remained undrawn and available at year-end. Moving on to our unwind cost. For fiscal year 2023, cash online costs remain in line with our expectations and came in 11% lower than last year. We continue to benefit from the weaker rand, while inflation of just over 5% was seen, including electricity and labour escalations. The variable cost savings as a result of lower production volumes were realised. However, this was partially offset by Williamson's once-off care and maintenance and remediation costs following the TSF failure. Then looking at our contributions by the various mines. Cullinan continued to be the largest contributor to both revenue as well as adjusted profits from mining activities and continued to demonstrate its quality, posting an adjusted profit margin of 55% even in a weaker year. Williamson was impacted by the move to care and maintenance, with ongoing costs incurred during the year, resulting in a gross loss for fiscal year 2023. Then taking a look at our balance sheet snapshot on slide 14. I want to highlight that our tender deferrals resulted in elevated levels of diamond inventory at year-end at some 715,000 carats, with the bulk of these being sold in our first tender of fiscal year 2024. The result of that tender was announced a couple of weeks ago. Gross debt, as mentioned, was reduced, contributing to around $50 million in cash interest savings annually, while our consolidated net debt increased to $176.8 million and a net debt EBITDA ratio of 1.6 times. Moving on to the next slide, on our disciplined capital allocation in fiscal year 2023, the slide sets out where our capital has been directed, with our priority one focusing on the online cost, stay in business capex, and in this year we commenced with cash interest payments on our loan notes of some $8.4 million. Our priority two capital allocations saw $72.4 million being directed to extension projects at both Cullinan and Finsch, while priority three capex or capital allocation of $144.6 million speaks to the debt redemption. No discretionary expenditure or allocations were made this year. Moving on to the next slide. In terms of our group guidance, which remained unchanged from earlier guidance, reiterating that we are looking to increase our production from 2.67 in fiscal year 2023 million carats through to 3.7 to 4 million carats by 2026. Cash online cost is expected to remain largely flat in real terms, while expansion capex is expected to peak in fiscal year 2024, whereafter reductions is seen 2025 to 2026. I'll hand back to Richard.
Thanks, Jacques. I'll now talk briefly to our operations, starting with Cullinan Mine. Highlights from this year is that remedial action was taken to address our lower grades on the back of waste ingress earlier in the year, and we are on track for delivering on our 24 guidance. We have continued to advance our projects on the eastern side of the mine at CC1 East and in the block cave, the C-cut extension, with 2 new tunnels. Looking to financial year 24, we are continuing to deliver steady state operational performance and develop the projects as mentioned, together with progressing studies around our mine plan extensions beyond financial year 2032. On Finsch, production fell slightly short of our revised guidance due to some operational challenges, which are being introduced through the introduction of new underground equipment, the recruitment of a number of senior technical employees to plug some of our gaps, and improve blasting processes. This was reflected in improved production in Q4 of financial year 2023. For this year, financial year 24, the focus will be on continuing to address and improve our ground handling and draw control, and to complete the projects at Finsch, being the phase 2 78 level extension, and then the development of the 3-level sub-level cave. At Williamson Mine, our focus for the year following the tailings failure was around remedial and restoration efforts to mitigate the impact on local communities and the surrounding environment. these are now largely complete. Operationally, we focused on commissioning the new tailings storage facility, which enabled production to resume safely ahead of plan in July 23. For this financial year 24, we will be focusing on ramping up to full production as quickly as possible and to also manage the near-term liquidity position at Williamson. We are also now close to finalizing the framework agreement with the government of Tanzania and in completing the transaction with Taifa Pink Diamonds, both of which have progressed during the year. So in closing, and talking to our purpose of creating abundance from rarity, we are on track to deliver substantial production growth as indicated of up to 1.3 million carats of incremental production in financial year 26. Although the current diamond market is softer, the actions we have taken as a business in continuing to build our resilience puts us in a strong position to leverage the supportive fundamentals in the market in the medium to longer term. Our strong capital discipline and the embedding of our sustainability framework across the business supports this strong and stable platform that will enable us to develop our high-quality, long-life assets in positioning to deliver on our value-led growth strategy. Thanks, everybody, and with that, I'll hand back to the moderator.
Perfect, and thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to review those questions that have been submitted today, I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we've received a number of questions throughout today's presentation. And Patrick, if I could just hand over to you just to read out the questions where it's appropriate to do so, I'll then pick up from you at the end.
Thank you, moderator. The first question is on dividends. Should investors expect future dividends, or is the focus going to be on organic growth?
Thank you, Patrick. Jacques here. Last year in September 22, the company announced a dividend policy. We do have quite a clear policy in terms of 15 to 35% of adjusted free cash flow will be considered for dividend payments. Obviously, this year, given the capital investment and coupled with the decision to defer certain sales, the free cash flow was negative for this year, hence no dividends, but we would be looking at opportunities going forward to resume dividend payments.
Yeah, and just to add to that, I don't think that organic growth and dividends are mutually exclusive. I think we will continue to grow organically. That is really what is behind the growth we've highlighted over the next 3 years of up to 1.3 million carats. But in building resilience, we're looking to be able to both grow the business and generate returns through the cycle.
Thank you, moderator. There are no further questions.
Perfect. Thank you very much for that. I think you've addressed those questions you can from investors. And of course, the company will review all the questions submitted today and will publish responses on the Investor Meet Company platform. But just before redirecting investors, provide you with their feedback, which I know is particularly important to the company. Richard, could I just ask you for a few closing comments?
Thanks very much. Really just to say, appreciate you joining the call, and we look forward to catching up in a little while. Thanks very much for your attendance.
Perfect. And thanks once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of PETRA Diamonds Limited, we'd like to thank you for attending today's presentation, and good afternoon to you all.